Whenever we see a drastic price movement on the chart, it's not something you or we can cause. These are the footprints of smart money. Next, we learned that a drastic move or supply zone occurs, and when all the criteria for an order block are fulfilled, that candle becomes our order block candle. First, we need to check if the last candle broke the low or high of its previous candle. In this example, we see aggressive buying. So, we need to look at the candle before a big momentum move. Did it break the low of its previous candle? Next, is there an imbalance gap between the candles? Next, is a break of structure forming? And finally, we need to check for break of structure inducement, meaning, were retailers trapped after the break of structure? Yes, here retailers were trapped by the lure of a breakout, which means this is a valid order block. We can expect that if the price revisits this area in the future, it might reverse because there are pending smart money orders here that weren't fulfilled in the first attempt. Now let's understand some important points. If, during an uptrend, the market pulls back and then moves upward like this, and the low of the last bearish candle is broken by a green candle from below, we consider it an order block. Remember, an order block candle can be of any color. Similarly, during a downtrend, if the high of the last green candle is broken by a red candle, we consider it an order block candle because it broke the high of the previous candle. Now let's understand how to take an entry. First of all, we need to analyze the market trend. If the market is in an uptrend, we need to find a bullish order block. If it's in a downtrend, we need to find a bearish order block. In this example, the market is in an uptrend, so we need to find a bullish order block. First, identify the footprints of smart money. This drastic move indicates that smart money entered here. Next, the last candle broke the low of its previous candle. Next, there's an imbalance between the last candle and the second momentum candle. Next, the price creates a break of structure here. And finally, we see a break of structure inducement. This means it's a valid order block. So, the next time the price revisits this area, we can enter in 3 ways. 1 entry at the top area. We can place a limit order at the top of the order block zone to enter the market. When the price touches this area, your order will be executed. The stop loss will be placed below the order block candle. We use this entry because many times, the price forms a weak structure in the order block zone and reverses shortly after. This entry ensures we don't miss the trade. 2. Entry at 50% level. In this technique, when the price reaches the 50% level of the order block, we can plan a trade with some kind of confirmation, which we'll discuss later. When the order block candle's range is large, we use this type of entry. The stop loss is placed slightly below the order block zone with a buffer to make it smaller. 3 entry at the bottom of the order block. Here, we plan an entry at the bottom of the order block with some confirmation, and the stop loss is placed below the order block zone. However, sometimes the price just touches the order block zone and moves up or down, causing you to miss the entry. That's why many traders avoid this type of entry. Let's look at some examples. Here, the market is in an uptrend, so we need to look for a bullish order block zone. Looking at this drastic price movement, we've drawn an order block zone here. This is a valid order block zone because all our criteria are fulfilled. The range of this order block zone is small, so we can place a limit order at the top to enter and place our stop loss slightly below this zone. Next, notice how the price comes down, just touches our order block zone, and moves upward. Let's look at the next example. In this example, the market is in a downtrend, so we need to find a bearish order block. Looking at this heavy decline, we can tell that smart money entered the trade somewhere here. So we've drawn an order block zone based on this candle. Notice the range of this zone. It's quite large. So we'll take an entry at the 50% level with some confirmation. See, when the price reaches here, it forms a medium-range green candle followed by a momentum candle. Simply put, this momentum red candle can serve as a confirmation candle. So we'll enter the trade here, and our stop loss will be slightly above this zone. Let's look at the next example. In this example, the market is in an uptrend, so we need to find a bullish order block. See, this is a valid order block zone, and the price also traps retailers here. However, the price reverses before reaching this order block zone. This means the order block zone is still valid. If the price revisits this area in the future, we can plan a trade. So this was a simple strategy for using order blocks. We hope you learned something new, and if you like the video, then subscribe to the channel and hit the like button, and make sure you join our free Telegram, where we shared our trades and setups absolutely free to help you. Thanks for watching.